Hey, this is Sharon Vornholt with the Louisville Gals Real Estate Blog, here today with another episode of Let's Talk Real Estate Investing. My guest today is Jim Ingersoll from Richmond, Virginia, and I'm really excited about this show. We're going to talk about how to build a portfolio of rentals without cash, credit, or going to a bank. Now, that's something. So Jim is a successful real estate investor. He's an author, a coach. He's published 2 books. And he has the Investor Success Podcast, which is terrific, by the way. He's bought hundreds of houses, so he's going to have a whole lot to share today. So welcome to the show, Jim.
Well, Sharon, it's really nice to be with you today. I really appreciate your having me on. It's great I love hanging out with great people doing podcasts.
Well, it is a lot of fun, isn't it? So
it is.
Let's start out, and I'm going to have you tell everybody a little bit about how you got started.
All right. Well, I started by watching my dad when I was young, and what he did is he bought some. He was a full-time architect, Sharon, and he was a part-time landlord, and that worked pretty well because I saw him go out and buy a handful of duplexes, and then it seemed like as I was getting a little bit older in my teenage years, he went out and he sold them, and he paid off the house we lived in, and I thought, man, that was so easy. Build a little bit of wealth and get out of debt completely, right? So I got married really young. My wife Sharon was 19 and I was 21, and we said we're going to jump right in, and we bought a duplex when I was about 23. It looked so good on paper. It was like $20,000 in Jamestown, New York, up in the snow belt. And what I didn't know is what I didn't know. So I didn't realize there's a reason it was $20,000 was because it needed so much work. And I didn't realize that I didn't have any clue how to do property management. And my property management consisted of working full-time as an engineer myself. And then after work, whoever had a pulse and a deposit could move right. You know what I mean? No screening, no background, no nothing. And then when they didn't pay me, it was pretty ugly getting them out. And when things broke and I was undercapitalized, I really struggled to get stuff fixed. So that was a tough life lesson. It cost me about 10 years because my wife, Cheryl, said, that's it. We sold it. I didn't lose money on it. And she said, I will never be a landlord again. So we took 10 years off and redid ourselves and came back, and it's been great ever since.
Came back educated. Your story sounds a lot like mine. You know, I think when you're really young and you start doing that, you're doing it on a shoestring, first of all. Nobody tells you you need to have money in the bank to really be a landlord and be successful at it. So if you stopped, then you weren't buying buy and hold properties. What was your next investing strategy?
Well, after we sold that, I sold it on a land contract and had a refi set up back then, and I got out of it. And then I took a job transfer here to Virginia. So after about 10 years, we came back in. The market was really roaring there around 2006, as you remember. You were investing back then. So we did a flip, and it did really well. And then I bought a rental, and my wife started warming up to all this real estate stuff again. And then I got to the point where I was climbing the corporate ladder to the point it was making me sick. And I said, I got to find something else to do in life. And so I learned to wholesale, and I struggled wholesaling at first, but then everything started to click. This is like in 2006. And
yeah, that's interesting.
Went into volume wholesaling from there.
You know, I tell people I'm an accidental wholesaler because I had been investing for 10 years and had never wholesaled a property. And I understand why people have trouble wrapping their mind around the whole wholesaling concept. But in 2008, when I was doing rehabs, that was the time here where they all started sitting on the market forever.
Right.
You had that money and you were on a timeline. Here in Louisville, we could get one extension on the 6-month contractor loan. So I found a house and I thought, boy, I just don't think I can sit here and do this rehab and worry about selling it. So I just called someone up and said, you want to buy this house? And they said, well, sure. And I'm thinking, boy, that's really easy. But what I failed to realize was I had a 10-year history and I knew people. So wholesaling is not the easiest way, I don't think, to start out. It's the way you can start out with no money, but it's not all that easy always.
Yeah, it does. I really struggled. So when I first started wholesaling, again, I didn't have great education at that point. I would sort of find a deal and not be able to close it with the seller, negotiate. I was really nervous about contracts. Then I would sort of find a buyer and I wouldn't have a deal. And then through a series of failures, I finally succeeded and I got everything in sync. And when I got everything in sync, it worked out really well. I found a guy that had about 40 houses and he was a burned out landlord. And I got that whole package. And then as I did that, I had some inventory. I built my buyers list. Everything sort of fell in place.
So do you still do all the strategies? Do you still wholesale and buy and hold and rehab?
I'm not doing much wholesaling. I'm doing a lot of rehabbing, and I do quite a bit of buy and hold, yes.
Okay. So let's dive into the thing I really want to talk about, and it's buying houses without a bank. Let's talk about that. People talk a lot about you buying property with no money down.
Right.
It's not, once again, this is an education piece that a lot of people don't have. So if I were brand new and I came to you and said, Jim, I want to buy some property, but I don't have any money, what would be your first advice to me?
Well, I would ask you why you want to do that, first of all, because like you said, if you're gonna invest in yourself for long-term wealth and long-term cash flow, you're going to need to build up some cash reserves at some point. So you may want to wholesale a little bit. You may want to try fix and flip or something else, so you've got some cushion to take some of the risk out of it. But let's say that you've got that. Maybe you're already working full-time or whatever your situation is. I do think that buy and hold is a great way to truly be an investor. It builds relatively passive cash flow. I've got quite a few rental properties, Sharon, and I know it's like a part-time job. My wife basically does it. And it's that long-term wealth because you get all the benefits of owning real estate assets that produce income. Your tenants go to work, they pay down your mortgages. You get all the tax benefits with depreciation. So if you understand why you want to do it, then you got to say, how do you want to do it? Well, there's a number of ways you can do it. You could buy subject to, you could control it without owning it on a lease option. You could do a joint venture. You could get the owner to carry the seller financing. You could do debt financing with a private lender. And so there's like 5 different ways that you can do it. You've got to decide what's best for your case.
Okay, so let's talk a little bit about that now. I did a subject to deal early on, and back in the day, it was really easy. You just kind of did it. Let's talk about subject to. Is it as easy to do today as it was 5-10 years ago?
I just did one a couple weeks ago. That was very easy. I think the key for the deal I just did, and I'm actually going to flip this one, so it's a little unusual. This person had a lot of equity, and you wouldn't think a person she had tons of equity, bizarre amounts of equity, $400 a month mortgage payment.
Oh, wow.
They're like 4.5%. But her car had just been repoed 2 weeks ago. And the power company just turned her power off. And I think that's sort of the key is everyone talks about motivated sellers, but when you sort of got a desperate seller, you can make a deal and you can make a deal pretty creatively, pretty easily because she needed help. And we really helped her a lot.
So just for anyone that doesn't understand, subject to is taking over a property subject to the existing mortgage. And in your case, it sounds like you made out like a bandit with the equity in the house. Did you give her any money?
I gave her a lot of money because she had that much equity.
Okay.
I'm not out to rob people, but I do like win-win transactions. So I picked up plenty of equity.
Yeah. And she still got some money, and you didn't have to get a loan.
I didn't have to get a loan, and she's able to rebuild her life. She is happy. She needed a quick answer. You know what I mean?
She needed a solution.
Good.
So let's move on down the line and talk about some of the other strategies that you use.
Okay. One of the ones I love is getting the owner to carry the financing. And you and I both like to market to people with a lot of equity. And there are a lot of people out there that own free and clear houses, a lot of landlords that own free and clear houses. But as they start to age, they start to get pressure from their families to get rid of their rentals. But they've been collecting cash flow for many, many years. So they're an ideal candidate to carry the financing. And you say, why would somebody want to carry the financing? I mean, why would they want to do that? That's like a misconception, in my opinion. Because first of all, they love cash flow. They understand they've got capital gains if they sell, traditionally, so that might set them up more for a lease option. But I always say, what are you going to do with the money? If I give you the $80,000 cash, what are you going to do for it? You know what they usually say? I'm going to put it in the bank. Well, what's the bank going to pay you? Well, in a CD, I'm going to make 3/4%.
Zero. It's basically zero.
So you see how the conversation goes. How about if you could earn 6 or 7%? Would you be happy with that? And so from that conversation, one landlord that's got a house free and clear, there's 5 or 6 different directions I can go with making them a financing offer. I may get low interest. I may get a deferred first payment. I may get 0 interest by offering them 100 payments is $650 a month on a $65,000 house, and you can build a lot of cash flow into your portfolio, or you can get that pay down on that mortgage really quickly. So I love owner will carry financing.
Well, and I think you hit upon something that is really important for people to understand. When you're doing getting the seller to carry back financing, you can offer them whatever terms that you would want. Now, you may have to negotiate some of those, but people don't always even want interest. I know people that have bought houses with 0 interest.
I have.
And yes, and I've done that. And also know people that have been looking at bank financing and hard money loans. So for them to get a seller to carry back at 5 or 6%, and they don't have to do the whole loan origination, that's a good deal for them. It's a good deal for the seller. But I think what people should take from your expertise is that you can create your deals, and there are many variables that you can change around, alter, do it however you want to do it.
Yeah, and I think that's a great point, because when you go to the bank and you meet a loan officer, they're going to tell you what their terms are, what the interest rate is, how many years of amortization, your payment's going to start in 30 days, all these different parameters of the loan. But when you meet a seller, like if you and I were meeting on Skype right now, we've got a blank piece of paper, and we write out what works for you and what works for me. And for a seller, they get a quick sale. They can sell it as is. They don't have a realtor sign. They don't have open houses. All these things are the benefit to the seller. And the benefit for the investor is you can make a deal without going to a bank.
Right.
You can make a deal with low or no down. You can make a deal with low or no interest. And that will build your long-term wealth really fast.
It will. And not having to go to the bank gives you ultimate freedom to do more deals.
Yes.
That you're not living by the bank's rules and the regulations, and you can only do this and you can do that. And one of the nice things about, I was talking to a rehabber this week, and he had negotiated a deal with seller financing. He offered the guy an above average interest rate for seller finance. He offered him about 8.5%, but delayed payments for 1 year.
I love it.
He got to, the seller was going to get more down the road by delaying the payments. His house was paid for, so he didn't have to have the money. But it was a win-win for everybody. I
love a deferred first payment. As a landlord, even think about it. If you don't have to make your first payment for even 60, 90, 120 days, you can't do that deal at the bank.
No, you can't do that at all.
Brought that one up. I think it's a great way to go, and it's a huge benefit to getting seller financing.
Now, if the seller is not, if they don't want to do seller financing, is that when you move to lease options as maybe your next strategy down the line?
I actually like making, sometimes depending on the seller, I'll make maybe 3 different offers. Maybe one of those 3 would be a lease option offer. I also love one, Sharon, I didn't mention, but I want to, is called the 50-50 offer. That's where I'm going to, and this is not a no money down deal, but I'm going to give you 50% of what you want today, and then I'm not going to give you another single payment for 6 years. Okay, and that can become no money down if you inject private capital, by the way.
So you get people to do that? No payments for 6 years? Do you give them all the payments up front first?
I give them 50%. So let's say it's an $80,000 property. At closing, Mr. Seller, I'm going to give you 40 grand. And then we're not going to talk to each other for 6 more years, and I'm going to pay you off with a balloon payment, another 40,000.
Nice.
It is nice because for 6 years, all that rental income is 100% free and clear. It's like having a free and clear house.
Mm-hmm.
6 years.
So then at the end of the time, what will you have put that money aside, or will you get a mortgage, or will you sell it at that point?
You could do any of those.
Do any of those.
Yeah, you could get a mortgage. You could sell it. You could bring in more private capital creatively. These deals work really good with things like self-directed IRAs and things as well.
Okay. So do you have a favorite one of all those strategies?
I really like getting no interest, or I really like that 50-50 deal when I can get it.
That's interesting. I think that's the first time I've heard about that one, but that's an interesting idea there. And that's especially good if maybe you're going to be in a different set of circumstances in 6 years, 5 years, 6 years, whatever the time is. It's very interesting.
The other thing, Sharon, is as discount home buyers, we're always competing with the other wholesalers, and they only know how to make one offer, cash.
Mm-hmm.
And they use their max offer formula that you've taught them and I've taught them, and that's all there is. But if the seller wants a little bit more money, I can give them a little bit more money if they'll help me by holding the financing.
Holding the financing.
So it gives me a competitive advantage as a discount home buyer in that case.
Yeah, for sure. Because anytime you can offer them more than one solution, you've got a better chance of getting the deal. So let's talk about marketing a little bit. You and I are big marketers. What's your favorite marketing strategy? When I first started wholesaling, I wholesaled 120 houses in a year. And that was like everybody wanted to know, what is like the one silver bullet? But for me, Sharon, it was never one silver bullet. Mm-hmm. I always did like 5 or 10 things, and I did them consistent every single month. So I did bandit signs. I did tons of postcard direct mail. And then, of course, later in life, we ended up with yellow letters and websites. And so I think all of that works. I mean, just over the last couple of months, I've found a couple of deals right off Craigslist that were for sale by owner, one off Zillow, one off Craigslist. I think all of these things work. The important thing is to have a plan and execute it every month. Mm-hmm. I think people that have one strategy get in trouble every time. People probably, it's easy for you to think of 5 or 10 things, and for somebody newer, they simply can't wrap their brain around it. So I usually tell them to pick 3 to 5. Pick those and nail those, get your systems in place, and figure out how you're going to do those consistently, and then start to add out other things. Because once you've got your basic system set up, then it's pretty easy to add one more thing. But the thought of adding 8 or 10 lead channels initially, people just go, I'm not doing that.
That's great advice. And as you grow as an investor, you can outsource those to virtual assistants. Is a great way to go.
Yes, it is. And I think we talked about this before, but people wait too long to outsource. I was the poster child for that one because, as entrepreneurs, we like to be in control, and you got to get over the fact that nobody can do it as well as you. They're going to do it a little bit differently than you, but it's going to be okay. But you want to get rid of it. One of my favorite people in the real estate world says you want to make yourself irrelevant to your business. You want to outsource everything except the parts you absolutely have to do. And that's a great way to look at it. At the end of the day, you really don't want a job. You want to build a business.
Right. No, and I think one way you can do that is just by taking a couple of days and write down everything you do, and then put a price tag next to it on what it would cost you to outsource it. And all those $10 to $20 an hour jobs, if you've got cash flow to support it, you should outsource them now and grow your business.
Mm-hmm. I know you and I are big on mentors. Let's talk about mentors now. For my part, I know that I wouldn't be where I am today without mentors, accountability partners, masterminds, all of those sorts of things. And people tend to say, I don't have any money for that. And you can get along for a while with free stuff, your blog, my blog, all the other blogs. And certainly they have a great deal of value, but at some point in time, you're going to have to bite the bullet and shell out some money. So talk to me about that for a minute.
Well, I can tell you my story. I told you my wife Cheryl made me take 10 years off. So when I came back in, I said, my heart says I want to do this, but my kids were young in high school then. You know what comes after high school? College, right?
College.
A lot of expenses. We wanted to provide college for our kids. And so my heart said yes. My checkbook's like, oh, this could be painful. But she said, all right, go ahead and start joining and going to live events and joining masterminds. And a couple of the people that really had a big impact on me was the late Jack Miller. He's since passed, but Peter Fortunato, John Shaw, a lot of these guys down in Florida really started to resonate with me. And then I joined a mastermind, and I met this guy named David Phelps, who's become a great friend over the years, and Quincy Long from Quest IRA, and a lot of people that I continue to surround myself with the greatest people that I can. That's why I mentioned that about yourself at the beginning of your podcast, because it's so important to get around great people. That's the beauty of the mastermind, in my opinion.
And I tell people all the time, I think the best masterminds come about when you're not in the same city, when you're from people of varied locations, varied experience. You can share freely then. You don't have to be worried about, well, that's my competitor, I can't talk. But you often can't see the forest for the trees. You're just too deep in the thick of whatever your problem or your mess or whatever it is, or whatever you're trying to solve. When I might call you up and go, Jim, I've got this, and I just can't figure it out. And you go, well, I can tell you exactly what you need to do because you're over here.
Right. You
can just look. It's so easy to see. And it's nice to get other people's viewpoints because you learn so much.
I like the part of masterminding also where you're allowed to be vulnerable and authentic. All of us struggle. We all have a series of failures before we have a big success. And when you're in a really mastermind where you're comfortable with the people around you, I mean, I've been in masterminds where people start crying. And I think that's a good thing. It's okay to open up and be authentic.
Yeah, I think so. If you have any regrets or, if you could go back and do things differently, you mentioned that you took a 10-year break. What would you do differently if you could go back?
Well, if I go back to my early 20s, I would certainly get myself around people that could help me succeed. I mean, I would invest in a mentor, into a coach, into a mastermind. Because if I had done that in my early 20s, man, I hate to think how much long-term wealth building I lost over those 10 years. It was a significant amount.
Well, yeah, you never get them back, but
you can make more money, but you can't make more time, right?
That's absolutely right. And I think, and it's always, I think the first thought is, gosh, I don't know if I can do that. That's a lot of money or whatever it is we're thinking. But then you have to ask yourself, if I don't do this, where am I going to be 12 months from now or 2 years or 5 years from now if I keep on doing what I'm doing? I think that's the real big question.
Yeah, I totally agree. I wish I would have studied people like Jim Rohn, who says you are the average of the 5 people you're spending the most time with, when I was young in my 20s.
Yeah. Do you have, I'm a big reader. Are you a reader? Do you read? Yeah. Do you have a favorite book you've read recently?
I read continually. So I'm always reading a book and I'm always listening to a book on Audible. So some of the recent books I've read include Tools of the Titans. I really love the 4-Hour Work Week as well. But I've also been reading a lot of Dave Ramsey's stuff recently. I read EntreLeadership was a great book, and then his book on legacy is really good. As far as real estate investing, one of the books I read was from Chris Voss. It's called Don't Split the Difference. Chris was a negotiator for the FBI, and his principles I've tweaked the way I work with motivated sellers as a discount home buyer based on Chris's book. Because his methods work. It doesn't matter if you're negotiating with somebody in a kidnapping or hostage, or whether you're negotiating for a car or to buy a house.
I've got that book on my list. I've not read that particular book, but yeah, I love reading, and I think I read real estate books, but I also just read books on entrepreneurship, which I think are hugely important to your business. So do you do live events?
I do live events. At this point, I've always done them in the past, and the last one we had was amazing. It was last April. But at this point, I'm really focusing on growing my masterminds.
Mm-hmm.
And so we meet 4 times a year live as a mastermind group, and that's where I'm going to focus my live events going.
Okay, that's great. And if people want to find out more about that, where can they do that?
For my mastermind, it's at investorsuccessmastermind.com.
Okay. And if they want to reach you and have any questions for you, is that also the place they should go?
No, you can go to bigmoneyinvestor.com. It's my blog and my podcast.
Okay. Yeah, and folks, check it out. I've spent some time looking around over there. He's got a great site over there. So, well, Jim, I want to thank you so much for coming on the show today. This has been great fun.
I've really enjoyed it. I love being able to network with people just like yourself, Sharon.
Well, thank you. Well, thank you very much. So this is Sharon Vornholt, and I'll be back soon with another episode of Let's Talk Real Estate Investing. And if you like this show, please share it around. This is great information Jim gave out today. So I'll be back soon with another show. Thanks, Jim.
Thank you, Sharon.